Bid you good morning, good evening, good night, wherever you may be watching this transmission across this beautiful commonwealth of ours. Well, here it is, guys. I've been watching this in the background, in the shadows, keeping quiet, kind of, just keeping my thoughts to myself. And this, well, it was released a couple of hours ago, and I wanted to kind of throw this out there. It's kind of somewhat important. I think you guys should kind of hear this. China's 17 billion default wave is about to break a record. So let's get into the a little bit of this. Unfortunately, look at this. I need to buy. So what you do is when you need to buy something from Bloomberg, just go like this, copy it. Okay, go into a new page because they want you to pay for fake news. You go here, you go here. Go here, and then you're going to find something that's not Bloomberg, because a majority of the time they just caterpillar off other stories and stuff. So here it is. There we go. This is the South China. They got it from the South China's Morning Post. Okay. China's tsunami of bond defaults topped the U.S. 17 billion since November, poised to break last year's record amid tepid growth. At least 15 defaults since the start of November have pushed this year's total to 120.4 billion yuan, within a hair's breadth of 121.9 billion yuan annual record in 2018, according to data complied by Bloomberg. The defaulted note amount, the small silver of China's US 4.4 trillion onshore corporate bond market, they've fueled concern about potential contagion. Here it is. China is hurtling toward another record year of onshore bond defaults. Oh, man. Let me just wet my beak here. Testing the government's ability to keep financial markets stable as the economy slows and companies struggle to cope with unprecedented levels of debt. At least 15 defaults since the start of November have pushed this year's total to 120.4 billion yuan, that's 17.1 billion, within a hair's breadth of 121.9 billion yuan annual record in 2018, according to the data compiled by Bloomberg. While the defaulted notes amount to a small sliver of China's 4.4 trillion onshore corporate bond market, they've fueled concern of potential contagion as investors struggle to gauge with the companies have Beijing support. Policymakers have been walking a tightrope as they try to roll back the implicit guarantees that have long distorted Chinese debt makers. So we know all that. Let's keep reading. Without dragging down the economy already weakened by the trade war and tepid global growth. Earlier I said sliver. The authorities have found it hard to rescue all the companies, said Wang Ying, a Shanghai-based analyst at Finch Ratings. Ooh, look at China's foreign reserve in U.S. in trillion. China's reported reserves of foreign currency, bonds, and gold. So here it is, sitting at 3.13 trillion. This is as of August. So, guys, you need to keep in mind, one, it's China. They're not going to tell you what you need to know. They're going to tell you what they think you should know. Or, like I said, I had a conversation last night on the show yesterday with the Raven. We need on-the-ground economists in China, like on the ground, like regional district managers that can give us raw numbers of what's happening. You know, you need like on-the-ground economists with policymakers. Why are they making these policies, or what are they going forward with, or why are they doing specific behaviors changing in the patterns of their lawmaking or policy making? Why? Because they have the raw numbers of what's really happening. So you need on the ground economists That's the only way, like, people that really see and hear and think and understand what really is happening behind the dragon curtain, or the dragon of a curtain, how the Chinese, or the China, is still shrouded in mystery. This year's China debt woes have spread to a broad array of industries, from property developers. The amount of empty. They were building condos in China for the sake of building them, just to have them empty, just so people could buy them and sit on them as investment tools or investment opportunities. So they're creating investment opportunities instead of developing long-term potential growth and investment to potentially reinvest. But instead of reinvesting, they reinvested in another damn property. Woo! And steelmakers to new energy firms and software makers. The types of borrowers facing repayment difficulties has also expanded from private companies and local state-run firms and business arms of universities, an obscure and loosely regulated corner of China's corporate world. Yep, state-run firms, and it's deregulated, of course. And now lending in some of these sectors are different, okay? They have loosely lending standards that are not regulated. So what happens is, I read the article a few weeks back that China's debt ratio, personal debt ratio, GDP, like growth in families, is approaching 100%. So for every dollar they make, they have to pay back $1, right? The Australians, for every dollar they make, they have to pay $2.07 back. Canadians are pushing $2 for every dollar they make. So this is very dangerous territory, the Chinese, and the personal debt of Chinese families have acquired, right? And a lot of it has to do with loosely regulated corporate world in China. So those are very dangerous sectors to kind of dabble with, right? One of those business arms, Peking University founder group, rattled investors on Monday after failing to repay a $2 billion yuan bond the same day. Tangshu Electronic Technology, a maker of photoelectric display components, failed to deliver early repayment in both interest principal for 1.7 billion yuan note. Recent signs of stress have also popped up China's offshore markets, which has so far been more insulated from defaults. Insulated from defaults. I think it's more of an insult. They got it right when I read it the way I read it. Remember, guys, I can't read. I have no education. But it's important to get this out. It's important to get the message out. Tianwu Group, a major commodities trader from the northern city of Tianjin, is poised to become the most high-profile state-owned enterprise. This is a big deal. So, Tianwu Group, a major commodities trader from the northern city of Tianjin, is poised to become the most high-profile state-owned, keyword, state-owned, enterprise to default in the dollar bond market in more than 2 decades. The company has recently offered a debt restructuring plan that entails deep losses for investors or a... where was I? Sorry, I'm getting messages here. Recently, debt market restructuring plan entails deep losses for investors or a swap for new bonds with significantly lower returns, the first of its kind for an offshore SOE issuer. That's running fear in the markets right now. That should run a ripple effect across the Asian markets, right? Tianwu Group is likely to default on its $300 million U.S. bond due December 16, one of the notes included in the plan, according to investors who cited the company's offshore debt manager. Despite the drumbeat of bad news, analysts say the threat of systematic debt crisis in China remains distant. I don't think it is a tipping point. You don't think? Said Todd Schubert, a managing director for fixed income, a bank of Singapore. China is a big market with a lot of issuers. In a functioning capital market, one would naturally expect some defaults. Yeah, but they're defaulting after, 2 decades of not defaulting? This should send a ripple or no faith or no confidence in markets and banking and bond markets and whatever you have your money in right now. The onshore default rate in China this year is expected to remain the same as last year at 0.5%, S&P Global Ratings said in November. In a report on Tuesday, Fitch said that the default rate for bonds issued by non-state Chinese companies increased to a record of 4.5% in the first 10 months of 2019, adding that the figure might understate the true level of the defaults given that some borrowers settle with bondholders privately rather than through clearinghouses. Okay, so there's a backdoor to this, right? The default rates for state-owned companies was just 0.2% thanks to the financial support from the government. Again, bailout from the government. Financial support from the government. And better access to funding from banks, Fitch said. Faced with corporate debt pile that's swelled to a record 165% of gross domestic product last year, Chinese policymakers are allowing more bond failures in part to impose the increased discipline on borrowers and investors. Yeah, hello. People are going to need to take a loss. Losses need to take place in different sectors. Rising defaults should be natural part of credit market cycle, said Annie Zhang, head of Asia Fixed Income from JP Morgan Private Bank. It is long-term positive for any market to develop good pricing mechanism for risks. Still, the process will be less rocky for investors if policymakers work to improve transparency around defaults, according to Cindy Yang, an analyst in S&P Global Ratings. So far, the defaults and recovery can be unpredictable, Hong said. This will hinder the market confidence and weaken the healthy development of China's credit market. Guys, this has been going on. How much of this? Now, here's the question. Okay, this is coming out. We're kind of getting a little bit of push and shove here with this, kind of showing weaknesses in the link and one of their weak links. Now, the main question of this whole damn thing that I just read for you guys, how much of this is realistically happening behind the dragon curtain? The red curtain, how much of it realistically is happening behind the closed curtains that hasn't been leaked or hasn't been addressed to the world or to even local media news? That's the question. Guys, don't forget to, channels are going to be hacked left and right. I know my channel's on the hacking block. I've been backing up my entire channel. The problem is I haven't gained one subscriber in, I think we're going into 5 months now. 5 months. One subscriber. I'm having a tough time getting my views. I'm having a tough time getting over 100 views. Guys, I'm on BitChute. Links are up top here of the channel if you're on a PC. I'm on BitChute. I'm on Brighton. Brighton's really good. All the channels you remember are on there from YouTube that got hacked. And the most important one is BitTubers. The reason why is because I'm actually paying minutes. I'm buying minutes on here, and I'm actually getting a ton of views on. I'm getting more views per percentage rate per subscriber. So there's some videos here, like the early videos I put up, 113 views with 24 subscribers. That's really good. Yeah, that's really good. Anyways, comment below. Let me know what you guys think. And don't forget to hit me up on Patreon. $1 a month, guys. $1 a month, that's $12 a year. Supports this transmission. Thanks for watching, and have a great day, guys.